inflation reduction sustainability also will be one of the risks, where whether the inflation continue to come down after Fed implement all these balance sheet reduction and also interest rate hike. If let's say the inflation prolong, then this may change the Fed policy as well, where they may prolong the interest rate reduction plan because of the higher than expected inflation. I'm Chye, a financial market analyst and coach at Beyond Insight, and this is your express session to get up to date with the stock market. We'll cover the market highlights, major stock market indices performance, and the upcoming potential opportunities and risks out there. Just an important note before we proceed, whatever we share here today is based on the latest data and facts. If there is further development, things may change. And we want to make sure that you know we are not a licensed investment advisor and we do not manage customers' fund. We are an educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your decisions, hence be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a recommendation to buy or sell. So let's start. As usual, let's start with the market highlights. So I would like to know how many of you have been active in the stock market over the past months. You may type me in the chat if you are active. All right, I see 1, 2, all right, a few of you type me in the chat. How was the market performance? Is it bullish, bearish, or sideways? Yes, bullish. So the market make all-time high, this including the Nasdaq 100, which track the top 100 tech stocks in the United States, and also the S&P 500 that track the 500 top stocks in US are making new highs over the past 2 to 3 months. The strong rally start after the December FOMC. So any one of you that follow the FOMC meetings or the US Central Bank meetings, what are the key message that sent out by their chairman and caused the market to rally to all-time high? Yes, during the December FOMC, the Fed actually provide a more dovish statement, which dovish means like more, I would say more stimulus-friendly message, but I would say is they are looking for easing policy now. However, the message is they downgrade or down projection the interest rate projections for 2024. Hence, the market speculate that in 2024 there are potential 3 rate cuts for 2024. Hence, overall market was bullish, and the market expects that the earliest rate cut will be around March timeframe in 2024. Hence, the market break out over the 2023 high and continue its rally and even break above the 2021 all-time high. However, having said that, the overall market was optimism about what Fed mentioned in the December FOMC, but the inflation data in January and also February are still at the high side. The inflation remains stubborn and hover around 3% region in both the US, UK, and also Europe region. And with the inflation still at the high level, I would say at the 3% region, which consider high for the Federal Committee to decide on whether to proceed with the rate cut, because the central bank goals usually will be targeting 2% inflation. And with the inflation stagnant at around 3% over the past 3 months, this may change the Fed view in terms of the interest rate policy. And they may not likely to have a rate cut as early as in March, but the most likely time will happen for the rate cut will be around second half of 2024, which is around June timeframe. And the SPY and QQQ, the ETF for S&P 500 and also the Nasdaq 100, SPY is the ETF for S&P 500 and the QQQ is the ETF for Nasdaq 100. Rally has been backed by the following. So any one of you aware of what is the catalyst that drive this round of stock market uptrend other than the rate cut? Nvidia earnings, all right. Okay, so the market rally has been backed by these 2 main catalysts. First of all, will be the potential rate cut in 2024. Like I mentioned earlier on, during the December FOMC, the message from the Fed was downgrade their projection or downward projection, the inflation, the interest rate target. Hence, market are speculating a potential rate cut in 2024. Hence, the market rally. And another key catalyst for the overall market to be bullish will be the AI trend among tech companies. So any one of you know what are the companies that in this industry or in line with this mega trend, the AI catalyst? Any companies you are aware of? For this, you may type in the chat. Yes, we have Nvidia, Microsoft, Amazon, even like Google also having their own AI software, and also same for Meta as well, which is the company that are doing all this Facebook, WhatsApp. They do have their own AI engine as well. So all these AI catalyst has been fueling the market rally because potential growth, because currently most of these companies are expanding their AI infrastructure. And when we talk about this AI, it could potentially power or increase a nation's GDP if, let's say, a country managed to get all this matured artificial intelligence implementation into their economy system, or even into the jobs market and into the corporate world and so on. So all these companies has been having high demand for this AI infrastructure. And I will talk more about this AI when we come to the opportunity section. So the market has been rallied mainly fueled by these two main catalysts. And the stock market currently is in an uptrend, and the tech stocks were leading the recovery early on during the end of year 2023 and helped to continue the rally during the January timeframe, as some of the tech actually reporting good earnings, especially those involved in artificial intelligence. And what is the implication here? Despite the strong market uptrend, I would say the market currently at a stretch level and may be prone to profit taking. So any bad news or a temporary setback or some temporary more hawkish message from the Fed may cause a pullback. However, a pullback will be a good opportunity for investors or traders that haven't get into the trend yet, because it will potentially still have upside after an initial pullback to a better valuation level. All right, let's move on to the next slide. So let's take a look on the stock market performance over the past month. And as an investor, we also want the most consistent market or assets when we invest. So to do that, let's gauge the performance of different markets from different countries. So let's start with the United States. So the Nasdaq 100 and also the S&P 500. So currently the market is in an uptrend for the US market, and it's at the extended level now. It's a stretch level, like I mentioned earlier, and the valuation is on the high side for now. And any negative sentiment or setback, negative news will have a pullback, and this will be a good opportunity for investor to get in. And despite the market at a high level, there is still potential upside, I would say, after a pullback, but it does not mean we can buy immediately. Investors or traders need to have a plan and enter according to the entry criteria. So usually as an investor or traders, we need to have our own investment plan or our own trading plan, and make sure you manage your risk properly. All right, then next let's take a look on China and Hong Kong side. So the China government and also the China Central Bank has been implementing a lot of monetary policy and also fiscal policies in the China market. This especially after the Lunar New Year. However, this does not mean it will turn into a bull market, and I would say currently the stock market in China and Hong Kong likely to be bottom. However, it does not mean translate into a direct bull market. This is because there are still a lot of fundamental problems in China. For example, geopolitical issues. So anyone aware of what are the geopolitical issues in China? Yeah, they have the tech war with United States, and also there is some issue with Taiwan regarding the Taiwan region. So this may have this issue may carry on for a few years, and it's not easy to resolve. And second thing will be the high unemployment, where the foreign funds are moving out from China, and there is a lot of factory actually reducing their hiring, and the jobs market there is having a high unemployment now, especially for the youth. The youth unemployment in China is very high now. And next one will be the deflation, where with people losing, with high unemployment, people are reducing their spending. Hence, we do see a deflation situation in China, where their inflation now is at minus 0.8%. And next thing, we also have another issue like property crisis in China as well, where the property market has been in a downtrend and in a downturn, and a lot of projects need more funding in order to complete. And we do see there are few China developer company or property company go bankrupt throughout these few years. So the property market in China is very slow now, and hence it's not easy for them to move out from this situation. So from here we can see that the China economy do have some fundamental issues now: geopolitical tension, high unemployment, deflation, property crisis, and also fund outflow. Hence, it may not easily turn the situation around, and the stock market may not likely to immediately turn into a bull market. It may consolidate sideways for a while we see how the China side resolve this economy issue. However, with all the stimulus coming in, with the ban of all this short selling in China, likely the stock market has been bottom in China, and also Hong Kong. And Hong Kong is on a bit unique because they do suffer double whammy earlier on. This is due to they exposed to the global market, also at the same time they are quite exposed to the China market. Hence you can see that in the early years of 2023 or during mid of 2023, we see that Hong Kong market was affected by the uncertainties in the global markets, and also at the same time affected by the slowdown in China. And going into 2024, their stock market still underperformed the rest of the countries. And lastly, it would be the FBM KLCI Malaysian index. And we can see that currently the Malaysian index has been turned into an uptrend. And this is likely due to people seeing some recovery in terms of Malaysian economy. However, the economic growth will be key factor for the continuation of the recovery for Malaysian stock market and also the foreign funds investment. So small nation like Malaysian, for the stock market to perform well, is highly reliant on the foreign investment as well. So we may need to continue to monitor whether the foreign funds are coming back in. And having said that the market has been underperformed the rest of the world over the past few years, we do see that the trend turned around since December last year. And the rally may be continued. And this is the economic growth will be the key factor for the continuation of the Malaysian market recovery and also the foreign funds investment. And having said that, there are still some fundamentally strong companies in Malaysia out there which you can look out for. However, for traders or investors that are looking for high growth, the US market will have more high growth companies and also have strong drivers and also at the same time having strong brands around the world. So any AI or cloud computing company or any strong brand names you heard from the US, you may type in the chat any companies or any strong brand from the US or any companies in the US that relate to AI or cloud computing in the US. You may type in the chat what company you know not from the US in this case. Yeah, Nvidia, Microsoft, Apple, all these strong brands are usually from the US, and we do see that in terms of high growth companies, there are still more companies or more mature companies that are having high growth in the United States, and they are also more regulated. So you can see that these companies usually in the US will have higher earnings growth and also provide more predictable returns. Hence, it's more favorable if, let's say, you are investors that are looking for high growth and also predictable return. And also, if funds move out from China and let's say funds are moving out from China that I mentioned earlier, certain funds may need to stay invested. So which market you think the money will likely go to? You may type in the chat as well. Which market, if let's say funds are flowing out from China, which market they will likely go to? Yes, US, potentially India and also Japan, but likely will be US because they are currently, if let's say talking about AI trend, US will be the most stock market with all these AI catalyst companies. And India is because of the tension between the China and US factories are moving into India in this case. And also some of the countries like Vietnam in Southeast Asia and so on. Okay, on top of that, there is still a lot of money on the sidelines as well. Currently, there is a record of 6.1 trillion in cash on sidelines in the money market. The money market will be a fixed income asset that will provide short term for funds to park their money in. It works like almost similar like our FD, most like our fixed deposit, where it will provide interest for you when you park your money there. However, the interest rate will be based on a daily basis for money market usually, and it will be a usually short-term kind of fixed income instruments. So we can see that there are 6.1 trillion in cash on the sidelines, and part of the reason why investors are stocking up to take advantage of the current high in the money market will be take advantage of the current high risk-free rate due to high interest rate in the US. Currently, the US interest rate will be around 5.5%. So it will be very beneficial if, let's say, investor can park their money, just get 5.5% risk-free return, which is considered quite high for in terms of risk-free return. And with the rate hike cycle ending, the massive 6.1 trillion pile of cash could be acts as a fuel to fuel the next bull market, which is currently we are seeing some a bull market in the stock market already, or could be fueling the bond rally as well. Bond is another instrument that people looking for if, let's say, you are going for fixed income, where people may want to lock down the interest rate as the high yield from the bond itself, the yield rate from the bond itself, if let's say the interest rate are going to be reviewed soon. Okay, so this is the potentially another catalyst that are providing more upside to the stock market. And next will be the important segment, which is what to focus for investors and also traders. So usually as an investor or trader, we will evaluate the risk before we are checking the potential. So what are the three major themes for first half of 2024? Anyone would like to repeat what I said just now in the earlier section, which is what are the three major themes for first half of 2024? Yes. So rate cut, potential rate cut, AI megatrend, and also another one will be the risk part will be geopolitical tension. So let's take on the risk first. So the first risk will be over optimism on rate cut. So rate cuts are most likely to happen June onwards, like I mentioned earlier. However, there is a contrasting opinion between the market and also the Fed. The Fed thinks that the inflation is still high and they want to see more data point. They doesn't mention or commit that they were going to cut the interest rate during the March. However, during the FOMC in December, when the projections come out, majority of the investor or the market actually anticipating potentially a March rate cut. If let's say this contrast continue to go on and the inflation data coming in continue to be around the 3% region, this may cause a potential pullback or sell off in the stock market due to this temporary divergence between the market and also the Fed opinion regarding the inflation and the Fed decision. And also recently, the Fed also mentioned that they will review the balance sheet reduction, whether to slow down the pacing of the reduction or increase the pacing of the reduction. So this is also a potential message we need to watch out for during the March FOMC, because the balance sheet reduction means that they want to take back the money available from the market. And in earlier days during 2021, they announced this together with the interest rate hike. So other than interest rate hike, Fed also reducing their balance sheet. So they're actually reducing the cash flow from the market, where they will, I think it will be likely selling bonds, because they sell the bonds and they take the cash back from the market. And inflation reduction sustainability also will be one of the risks, where whether the inflation continue to come down after Fed implement all this in balance sheet reduction and also interest rate hike. So this may prolong, if let's say the inflation prolong, then this may change the Fed policy as well, where they may prolong the interest rate reduction plan because of the higher than expected inflation. And next will be geopolitical tension. So currently, how many wars we have around the world for now? Anyone aware of any war still ongoing, or the world is now very peaceful? All right, so we have two wars going on, unfortunately. First will be still the Ukraine-Russia war still ongoing after they started since 2022. It has been in the second years, and hopefully they will resolve soon. And the second war will be between the Hamas and also the Israel side. So this also has been going on for a while, despite we no longer see that much from the news headline. But we may need to continue monitor this, because this may cause, if let's say this escalation this war escalate further, it may affect overall inflation for the US or Europe region. So we may need to continue monitor this. And lastly will be the China-US tech war. This is more towards a technology war between US and China, and also all these tariff and also tax between these two countries. So currently we have, and also the Taiwan region issue. Hence we still have this geopolitical tension around, and we may need to continue to monitor this. And the China-US relationship and the tension likely will going on for the next couple of years, or even going on for maybe close to a decade. So we cannot know the future, but this issue likely won't be easily resolved, and it could be there for a few years. And lastly will be the slower consumer spending recovery, where we see that China still in the economic crisis. This may affect the consumer spending in the US and also in China as well, because China are the second biggest consumer market in the world, other than Europe. I think in terms of nation, they are second biggest consumer market, and it may affect the US retail companies' sales in China, especially those highly exposed to China, like Nike, like for example Starbucks and so on. And also the high inflation in the US region, still around 3%, may slow down the consumer spending recovery, because if let's say inflation still high, then the people over in the US may likely to still cut their spending for the discretionary side. So likely they will still cut down their spending on those unnecessary items that are not necessity yet. So the high inflation also may affect all these retail sector in the US to slow, because in the late last year we do see some recovery in retail spending in US. However, with high inflation over the past 2 months, likely it will slow down the recovery in the US for the consumer spending. And with all the risks, going through all the risks, let's go through the opportunities now. So first of all will be those industries that align with key themes. So for example, mega trends. So mega trends are it's the big future trends that we're seeing across the economy. For example, like artificial intelligence, cloud computing, edge computing, and also like all these next gen broadband and so on. But for 2024, we do see that AI will be the one that having a high growth. over the past year in 2023, we heard about AI in terms of like NVIDIA's, all these graphics card, all these cloud computing related like Microsoft. So in 2023, all these corporate are laying down all these basic infrastructure for AI, or those infrastructure in AI. They invest a lot in all this infrastructure. Hence, all this infrastructure require a lot of GPU, a lot of servers and so on, data center side. So for 2024, people looking at the wave 2 or second wave of AI, where they are moving towards the consumer markets. So in 2023, companies are setting up all this infrastructure. So 2024, after increasing the capacity of the infrastructure for 2023, so 2024 likely will go to the consumer side or corporate side. So you can see that recently we do see that we have started to have all these AI phone, AI laptops, and so on. So things are moving towards the consumer market. And also corporates start to spend money or projects onto AI-related projects. For example, certain manufacturing lines start to implement all these AI function or features into their manufacturing line. And MNCs like big companies, multinational companies, they will implement all these AI tools across department as well to improve their corporate or improve their organization functionality. So we can see that second wave will happen around 2024 and late 2024 as well. And the AI demands will continue to grow likely will continue to grow. And next will be the industry recovery. So PC demand recovery is one of the key themes I've been talking since 2023. Unfortunately, because of the high inflation, things are still going slow. And with the high inflation, people are still cutting down their discretionary spending. Hence, the PC demand recovery still at the slow side, at the low side. And we do see that maybe second half of 2024 might be some recovery due to the launch of all these AI-related computers and also smartphones going into the consumer market. But we need to monitor closely the inflation figures because this may affect the consumer spending over the coming months. And likely, if let's say for the PC demand recovery, likely will be second half of 2024. And other than the AI flowing to the consumer market, we also see that the upgrade cycles has been past due. This is because in 2020, a lot of people actually spend money on their laptops and also desktop due to work from home and COVID. And now we already passed the 4 years upgrade cycles. If let's say people are delaying their upgrades, I think likely they will upgrade their laptop or PC this year or even next year. The 4th or 5th year usually will be the end of life of a PC. PC maybe get outdated after 5 years or 6 years. So these cycles are getting closer and closer. So we may need to continue to monitor all these information coming in the future. So other than those industries or companies that are related with all these key themes, investors and traders also can go for those companies with low debt, low exposure to bonds, and strong cash flow. So why I said go for all these strong fundamental companies that have low debt, low exposure to bonds, and also strong cash flow. This is because we are still in a high interest rate environment. The interest rate is still at 5.5%. So if the interest rate at 5.5%, do you think it's cheap or expensive to service your debt? You may type in the chat whether this is cheap or expensive to service a debt. Yes, it's expensive to service a debt. Hence, if let's say you are choosing the high debt companies or those companies are still emerging, which requires a lot of loans, this will affect their income as well because of the high interest rate. Hence, if let's say you go for those fundamentally strong companies with low debt, low exposure to bonds or strong cash flow, then you already mitigate the interest rate risk when you are selecting the companies. And also, we do see a recovery for consumer discretionary and also consumer staples from these two sectors, which is closely related to the retails and also consumer spending. And there are a few good companies in this sector, or I would say in this segment. However, the most direct one you can focus on will be all these credit companies that providing credit card service like MasterCard and also Visa, which we recently see there's a strong recovery for this type of companies as well. And during their earnings, they actually mentioned the recovery in consumer discretionary spending. All right, so these are the two companies that you can study more about in this credit sectors, credit services sector or industry. And also, company with lesser revenue and dependency on foreign market will be another opportunity or another companies that you can look on or look to. This is because with the tension in between China and US still ongoing, companies with high exposure to all these related regions like China or even Japan, Taiwan, or Korea will highly affected if let's say there is some tension going on between these countries in the East Asia region. And also at the same time, with the high interest rate, we do see that if let's say the Fed keep on delay the rate cut, the dollars may remain strong, and this may affect the revenue reports for those US companies that having high foreign exposure. For example, let's say you are selling in China, after convert to USD, you may report lower revenue when you are reporting your earnings in the United States, and this may be less favorable for those companies that are having a high foreign revenue. However, with those lesser foreign revenue dependency, their earnings report will be all right, won't affect by all this foreign exchange. And also, if let's say they have high exposure in the United States domestic market, then they will be least likely to affect by all this geopolitical tension as well. And lastly will be the money on the sidelines, like I mentioned earlier, 6.1 trillion cash on the sidelines in the money market. And if let's say when the high interest rate environment ends, then this money may slowly deploy to the stock market or even the bond market as the rate hike cycle is over. However, we do see that the rate cut cycle will be gradual rather than very aggressive type of rate cut. So from here we can see that the US still have the strongest economy, like I mentioned earlier. If let's say you compare the economy relatively between China, US, and also Europe region, all these are matured market, you can see that US still having the stronger economy. China, in the past, they are having high growth, but now their growth are slowing down, and they are slowing down quite fast. Hence, it's not a good fundamental or a good market to look at yet, despite there's a lot of valuation, low valuation stocks now because of the fundamental problem of their economy. And in the Europe region, their growth have been slow. So if let's say you compare these three markets, US still providing the best stock market. And in terms of high growth company, they are also there. In terms of brand names about all these key catalysts like AI, cloud computing, they are also having the most companies over there. However, I repeat again, currently the stock market is at a stretch level, and any pullback will be an opportunity to enter stocks that are related to all these mega trends. So while waiting for the pullback, you may take this time to learn up the skill sets and also capitalize on the upcoming continuation of the stock market rally, because we do see that there is still potential upside with all these catalysts around. So the stock market is still the best instrument to generate higher returns than inflation. And it has the US market will have the most consistent return, like I mentioned earlier, high quality companies, high growth companies, companies that in line with mega trend. And like I mentioned earlier, they're still having the strongest growth worldwide for 2024 because of other regions slow down. So the stock market recovered into uptrend, so there's still potential upside, like I mentioned earlier. And based on the macro factors I mentioned, 2024, we do see there will be potentially interest rate cut second half of 2024. The AI second phase, like I mentioned earlier, second wave of AI that going into consumer spending, and also the continuation of their AI's infrastructure upgrades. And towards the end of the year, we do have US election as well. However, having said that, we want to invest in a safely and systematic way. And we do have the most systematic calls in the market, which we have process map for every trading style or process step for every trading style. We have the versatile strategies to handle all the market conditions, including like long-term, short-term, and even intraday. And we have a safe approach as well, where we cover a proper risk management. So you won't easily burn off, or so your capital will be protected, and you won't over invest or over expose your capital to unnecessary risk or to the market risk. So usually you need some time to plan and also practice and to pick up the skill set while you waiting for the opportunities. Like I mentioned earlier, market is stretched. We may want to wait for a pullback, and when the pullback comes, there will be opportunities. And since this is just a 30-minute market update, I would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic, versatile, and also safe way. We also have a hybrid class for the coming intake. So do join the 3-hour webinar to find out more about it. And the next available webinar will be on 3rd of March, 2 p.m., which is a Sunday. And also, if let's say you cannot make it during this Sunday, you can go for 7th of March, which is a Thursday, 7:30 p.m. You may scan the QR code to register for the preview or the webinar, 3-hour webinar. So if you find this market update is beneficial to you, do recommend it to your friends. We will have it monthly, end of the month, unless there is some busy schedules for us, and we will temporarily pause it, but usually we will do it during end of month. So with that, let me open the floor for question and answer, any Q&A or any questions you would like to ask me throughout this market update, or any stock market questions you would like to ask me about. Okay, what do you think? Okay, first question I have, what do you think on the current EV industry? All right, so for EV, the electric vehicle market, currently we do see that there is a lot of headwinds in this industry. This is because there are strong competitions among companies. For example, the competition between BYD and also Tesla. They are outrace each other to capture the market share. And when two companies are having the strong competition, or the industry having strong competition, companies tends to have a price war. And do you think that price war will be good for this industry? Right? So I would say likely not. Hence, it may affect their profit margin in this EV business. So I would say the EV industry are having a very strong competition now. And as an investor, we want to look for those companies with a higher profit margin or the industry that are more profitable or stable. All right. So currently, EV are having a strong headwinds because of strong competition in the segment, and companies are having price war to capture the market share. All right, and please cover Singapore market. Yeah, I'm not familiar with Singapore market because I only invest in US and also Malaysia. So for Singapore market, yes, in future maybe we will take a look on what are actually the potential potential opportunities out there in Singapore in terms of like let's say for whether any companies relate to all these mega trends and so on. And what is the target for S&P 500? So I don't have any crystal ball. So we trade based on the technical charts. Currently, the S&P 500 are forming some resistance and also the Nasdaq 100. And it's at a stretch level. Hence, we will wait for the pullback and form a support before we can look for all these potential opportunity for our entry or investment entry. Okay, so more question coming in. What is the minimum amount to invest in the stock market for a beginner? So yeah, you may come into our preview to understand more the webinar, the 3 hours webinar, scan the barcode. We do have some topics covered about that. Okay, Bitcoin cryptocurrency. All right, so currently we are expecting a rate cut, and I understand that when people are expecting a rate cut, the US dollar likely will be weakened, and people do see that potentially those instruments or those assets that trading against the US dollar might have a strong rally. Hence, Bitcoin actually rallied during early of the year. First of all, will be the Bitcoin ETF approved by SEC in the United States, Security Commission in the US. And also, other than that, there is a Bitcoin, I think, halving of Bitcoin mining in coming April or May. So this will be one of the catalysts that Bitcoin traders or cryptocurrency traders looking at. Hence, the Bitcoin price has been bullish over the past few days as well due to this catalyst. And yeah, MYR against US dollars, yes, we are still on the depreciating side because of our slowing down economy in Malaysia, and also in the past people are looking at the political stability. So the key catalyst, or I would say the key turnaround for Malaysian ringgit will be when foreign funds or foreign investments start to coming back in, which currently we do see some, but not really coming in. The foreign funds not really coming into Malaysia market yet. So this will be the key turnaround for the ringgit. If let's say we want the ringgit to recover, we must see a high economic growth or strong economic growth in Malaysia, and also at the same time foreign funds are coming back in. Okay, so yeah, okay, so let me answer maybe one or two last few questions. So why recently pop up many opinions about US stock market crash? So time to time you always see all these people predicting a big crash, and usually when they you don't just get panic because of all these people's opinion. You may need to study the overall stock market situation, the macro trends, the economy, and so on, so we can make wise decision. Because great companies usually decide to design around to in a high growth, and also design around to break the market resistance. So yeah, a lot of people may predict all these doomsday sayers and so on, but the most important thing will be have a systematic way or systematic plan when select a good stock, select strong stocks, then have a systematic way to select to trade or invest, and also make sure you have a proper risk management, and also make sure you have the right strategy in different market situations. So this will mitigate your risk, and with the proper risk management, you can protect your capital in case the market are really coming down. Because as a human, I won't know the future. People may predict there's a crash, may predict a very strong bull market, but what we do as an investor, we need to analyze the data, and also at the same time have a proper risk management, and also deploy the right strategy to adapt according to different market situations. And also lastly, let me answer the last question is like, is the non-AI semiconductor will be good in 2024? I would say yes. The catalyst is strong. The companies, the market share is still growing, and the AI trend will be, the demand will continue to grow. This is because a lot of companies will start to switch to AI-based system as well. For example, like I mentioned earlier, certain companies start to implement all these AI system into their manufacturing, their management system to like optimize their corporate functionality, and also optimize the production output and data tracking and so on. And the demand for all this infrastructure will continue to grow. And as we go into further future, you may also see that consumer end will be start using all these AI tools as well, AI function, AI tools, AI software, and so on. and this will continue to increase the demand for the infrastructure and so on. So I would say currently NVIDIA still have room to grow. We do have a workshop or we do cover certain NVIDIA company studies in some of our workshop, and we do see there's a potential upside if let's say they can continuously deliver the market expectation and deliver the growth that they project on in the semiconductor, in the AI world or in the AI trends as AI demand. So NVIDIA, if let's say they can continuously deliver whatever the expectations from analysts are, and also deliver whatever demand in the market, and the demand is demand continue to grow, the whole semiconductor industry still have a potential upside. And I would say NVIDIA currently, yes, it's in the high side, but it's not a bubble price yet for all these AI related segment, because the demand is high, the potential growth is high. But however, having said that, high growth everything, there's still a potential risk. For example, the competitors. Let's say, for example, let's say suddenly Huawei in China also come out with their own AI chips that are able to compete with NVIDIA. Then it will shift the whole view of this AI trend in terms of NVIDIA or Microsoft and also AMD. So you need to watch out for potential threats from the China or other region as well, or any competitors start to come out with the products that are able to capture the market share of NVIDIA or even AMD. So currently NVIDIA is still providing the strongest or the highest performance GPU, but things may change. So we may need to constantly monitor the situations. But for now, at this point, I would say yes, NVIDIA stock price is at the high side. But if let's say they can continue to deliver the earnings, the demand continue to grow for AI segment, I would say they are all right. Okay, so with that, let's conclude today's session. I hope that I answered most of the question in Q&A. I supposed to take 2 or 3, but since I see a lot of interesting questions, I just quickly go through them. All right, so again, if you find this market update beneficial to you, do recommend it to your friends so they can benefit from it as well. And for those that are interested in investment or trading, you may scan the barcode and sign up for the free 3 hours webinar. All right, so that's towards the end of the session, and see you all again during the next month's market update. Bye-bye.